Hello everyone, my name is Gil Martin. I am the Commercial and Natural Capital Director for a company called Restore, proud sponsors of today's event. And I'm going to talk to you a little bit about the big picture movements which are shaping the natural capital market. I have spent a lifetime working in the environmental sector, finding the crossroads between ecological, environmental impact and financial return. I'm just going to have a play with the button. Lovely. So today I'd like to talk about Restore just to start with and what we do. So Restore as an organisation, our purpose and our mission is the transition of landscapes into ecological and commercial health. And that's at scale and at pace. And we do this with our end-to-end nature restoration service. And that's led by nature, but paid for by natural capital. So over the course of this talk, what I hope to do is to share some insights learnt on that journey that help us to understand a fundamentally changing landscape that we all operate within. So in the short time that I've got, I hope to leave you having answered three big questions. What's the value of nature? Who pays? And how to create nature revenue. And in doing so, I hope to be able to start to frame a seismic change in the land sector that we all operate within, and perhaps highlight what is a literal transformational opportunity brought around by that change. So, what's the value of nature? The big question to start with. So I want to highlight perhaps a sensitivity or a tension that I feel, and perhaps some of you in the room feel, which is that the glorious innate beauty of nature is stubbornly and elegantly beyond quantification. And to try and apply value to it is at best clumsy and sometimes even ugly. But capital B-U-T. There is a reality which is beyond dispute, and that is that every single person, every single business, every single government and every single country is utterly dependent on nature and the services that it provides. Not just for nature itself, but for the societal benefits and for the people in this room, for the commercial performance of land ownership and land management. So whether you agree with PwC in their 2024 assessment that nature had a value of around $44 trillion and some 50% of global GDP was moderately or highly dependent on nature, or whether you agree with the Wildlife Trust, the WWF, and their assessment that the combined benefits of economy and society and the welfare that nature brings total some $124 trillion a year in value. There is an overwhelming reality that nature has a commercial value and that we all need to start to understand that. We haven't, to this point, valued nature. And as a result, we've all but lost it. And in the space where nature once stood, now stands risk. So I've, in the course of conversations over many years, trying to explain this dependency and this value that nature brings, often found it easier to communicate the cost of broken natural systems rather than perhaps the value of healthy ones. And so I'd like to give you a couple of examples there. And perhaps I found it easier because there are so many examples. But globally, if we just chose pollinators, for example, if we lose our pollinators, and at the current rate of invertebrate decline, that is a material risk, then we stand to lose a segment of global agriculture worth some $577 billion a year, not to mention the incalculable humanitarian impacts of such a loss. As a sort of in brackets caveat, there is some work and some research being done which is going to cost the feasibility of hand pollinating our crops in such an event, and the number there is around £1.8 billion a year, quite aside from the fact that that would be very, very sad indeed. Then closer to home, we could perhaps look at the cost of flood risk in the UK. That's some £2.2 billion a year, and that is increasing year on year and is set to go up by at least 50% or as much as 50% by 2050. And that is largely as a result of dysfunctional catchments, broken hydrology, and of course the impacts of climate change over time. So there is a clear, calculable cost to broken nature. So what about the opportunity? What is the opportunity? And we find ourselves sitting here at this transition moment, and the opportunity is in realising the tremendous value of the land that we own and manage, or perhaps more accurately, in the ecological services and the ecological function of the land that we own and manage. And so how can we build nature into that portfolio approach to add an extra revenue stream, to build resilience, to build diversity, and over time become its own asset class? So the next question that I was hoping to answer is who pays? A pretty important question, because transitioning landscapes back to their rude ecological health isn't easy, and it certainly isn't cheap. And so finding how the cash is going to flow, attending to some of those questions that we've heard in earlier talks about latent but so far slow markets, finding out who is going to pay is really important. And that the big picture view of that is made up of three pieces. So at the top, we've got we find ourselves in the midst of an awakening, and many of you in the room will already be there, which is that institutional capital, sovereign wealth funds, pension funds, private equity are becoming aware that all of their assets, and when I wrote my notes I underlined twice the word all, are exposed to nature risk. And the performance of tens, hundreds of billions of pounds of investment in agriculture or in real estate or in commodities, seemingly unrelated assets, are inextricably linked to the healthy function of our natural services. That awakening is going to have profound impacts on how we do business and on the business world, and in truth, ultimately on natural capital and natural capital markets. Businesses are going to be unable to access the capital which fuels our economies in time without being able to demonstrate not only contingencies and mitigations against their nature footprint, but also a plan to invest in nature positivity. The second in the middle piece of the sandwich is the broken natural systems, and so Jim's talk really played to that piece, which is there are organisations already investing in or rather already suffering the costs of broken natural systems. So there are organisations who already have to spend millions of pounds cleaning water. There are already businesses who suffer loss of trading due to flood damage or closures or lack of raw materials. And so there are organisations who are willing to pay for interventions that will help resolve or solve those issues, especially if those interventions can add brand value, build community, help with market positioning. Which leads us on to the third piece of that sandwich, which is the growing awareness and influence of consumers. And so those businesses that can demonstrate activity and responsibility and purpose will be able to add value to their products and services. They will be able to attract and retain the best talent, and they will be able to build their brand. And those are all tangible ROIs for investments in nature. And so the culmination of those three big pillars of activity or awakenings is what's going to be driving investments in nature positivity. And it's those investments, corporate investments in nature positivity, which are driving the natural capital market. And so it's the natural capital market, which is fed by those three pillars I've just described, which is responsible for the transitioning of landscapes and the unpacking of this ecological opportunity. So how to actually create the revenue? A pretty important question, and we've already established there's a growing demand, and we in this room all know what natural capital is, but let's just touch on it for a second. So your land the outputs from your land will include natural capital outputs, which include the usual suspects that we've all heard before. So carbon sequestration and abatement through the various emerging and current carbon codes, to biodiversity net gain, legislated in English law, at least for now, and then also encompassing some of these emergent markets. So there's voluntary biodiversity credits on the scene, often talked about, very rarely transactions made. Then there's impact tokens and corporate impact partnerships and relationships. And then there's natural capital that will feed into that nature as a service. So those organisations who are willing to pay for interventions which they're currently suffering the cost of, those businesses that are perhaps suffering losses as a result of flood damage or as a result of catchment dysfunction. And so to refer back to something that was mentioned in an earlier talk, any one of those particular approaches is fragile in a number of ways. Fragile because it might have lumpy cash flow. Fragile because it might have extended time horizons or uncertain time horizons. And so by blending together a mixture of those early adopted mandated systems with some of the more emerging markets, then we're able to create a more resilient, more diversified portfolio and iron out some of those crinkles that have been preventing investment to this point. But sprinkling over some of the key points which are listed below, also add credibility, traction and momentum to your portfolio. So ambition is utterly key. At Restore, our model offers landowners a really exciting financial return for this ecological transition, and it's way beyond the value or the costs that was required just to pay for the interventions. It actually provides a hefty and exciting profit margin, and that's critically important if you want to transition rapid uptake. If you want people to take part, change is difficult. To stop what you were doing before and to do something different requires the incentive of a genuine commercial return. That ambition should and does extend to the ecological and societal ambition for a project. The more ambitious it can be, then the more saleable, brandable the natural capital outputs will be when you take them to market. And just in brackets at the end of that sentence, it's worth acknowledging that natural capital doesn't have to be the total objective of that project. Often natural capital is best used to facilitate and to fund the objectives of a project rather than to be the objectives themselves. I've seen many projects over the years with a single strand of natural capital, let's say perhaps carbon, that has become skewed by the slightly peculiar objectives of whatever the code that was currently being deployed were. And so far better to have a clear, ambitious vision that the natural capital helps to facilitate. Complexity is key. So although it's easy to simplify things because complex notions are difficult to quantify and they're difficult to communicate, the reality is the more complex our ecosystem restoration, our landscapes, our portfolios, the more robust and the more productive they're going to be, as well as being resilient to those factors that we may not be able to predict, like fluctuating market demand or even sudden shifts in government policy. Then if you are going to restore landscapes at scale, at pace, collaboration is obviously key. So finding trusted partners that can help you ecologically oversee really high-level restoration whilst providing a route to market for that all-important financial return. And specialisation is afforded when you collaborate. So restoring landscapes highly ecologically ambitious is a science and an art, and it requires an understanding of natural processes which takes a lifetime of dedication and research and passion to accrue. And Restore's lifetime specialisation is nature, and as we've already discussed, all good things come from nature. And then last of all, the story is critically important. Building a narrative around the work that you're doing, finding ways to allow those good news stories, which are almost inexhaustible in their delivery of any restoration project with high ambition and high intent, helps to differentiate your product, to move you into a race to the top where people are seeking to get the most impact for per pound spent rather than the most units per pound spent. And so time spent on story is critically important. So ultimately, in order to get hold of the wild returns that natural capital represents, we need to have this diverse, complex, specialised, collaborative, brand-led approach and we need some of those big movements in institutional capital to catalyse the market that we're all so excited about. I hope that I've been able to answer those three questions and begin to frame the emergence of a genuinely catalytic opportunity that we all sit on the fringe of unpacking and exploring. I look forward to answering your questions in the panel.